Oh, thanks for the intro, Aaron. I've just got to say, I'm amazed at where Aaron's at. Actually, Aaron is now hosting these these um, these trainings, and Aaron, you've kind of like flown actually over the past few months. You're to like one below educator now, aren't you?
um, I don't know, just it's like working hard, trying to support
Yeah.
coaches the best we can.
Okay.
Well, that's good, man. I think your journey is actually a great testimony about
Yeah.
someone who's diligent and someone who wants to really apply what they're learning. So, um, I think that your journey is excellent, and your knowledge, in terms of where you started from to where you are now is amazing. So, I have to take my hat off to you, and all you other guys that's on the call, whether or not you are newly signed up or you are slightly further along down the line. Just want to say a good welcome to you guys, and hope that this presentation is going to be of value to you. Some of you who are a little bit more aware about trading might start to see ways where you can probably implement some of the things that I'm going to talk about. And for some of you, some of this content might be relatively new, but in any case, there should be something for everyone on this. I just want to make sure you guys can see my screen okay, yeah?
Yeah.
Yeah, I'm good.
Brilliant, brilliant, brilliant. Okay, so as Aaron says, I'm going to be talking about the DeLorean. Well, in fact, I'm only going to briefly talk about DeLorean. I'm going to really talk about one of the signature trades that come within the DeLorean suite. Now, what is DeLorean? DeLorean is basically one of the strategies that sits within the IAM Academy. And it's essentially an algorithmic strategy developed by one of the educators by the name of Tyrone Foster. And essentially what it does, it gives signals for trades that you can take. You can literally just wait for the signal to pop up. And these trades happen across all time frames. So we can be looking at the 15-minute time frame, hour, 4-hour, daily. Depending on how much time you have to give to trading, you can decide which time frame you want to trade. And the beautiful thing about DeLorean is that it's very, very simple to use. All you got to do is look for an up arrow or a down arrow. When you see those on the DeLorean, you can take a trade. In fact, at the end of the presentation, I'll probably show you what the DeLorean program looks like, so you can see exactly what I'm talking about.
Maurice, can I just say one thing before you continue?
Yeah, sure.
You have to do the rest of this presentation like Tyrone Foster. Right? Right? I don't know if any of you have ever seen it, but you got to do the rest of this presentation exactly like Tyrone Foster, okay? Otherwise,
Is the arrow up or is the arrow down?
We need music too. We need Blue Party music too.
Yeah. Guys, all I'm going to say is like Tyrone is like a guy on steroids who's on steroids, who took steroids last night and is taking steroids now again. All right? He is Mr. Super Hype. But anyway, it's a good thing because it does keep you energized and motivated. So I'm going to just touch on what he does. I mean, he's a master educator. He's someone who's devoted years and years into studying and dissecting the markets and repackaging all that information into a very user-friendly system that anybody can use. So if you've not already signed up to DeLorean, I know that every now and again, he does open up a free training for those that do not have the DeLorean package. So you could get an overview of exactly what it's all about. But essentially, as I said, it's just an algorithmic strategy which he's developed, and it gives you very, very clear and precise signals for trades across all the time frames. And the way in which you identify a trade is with a red arrow for a buy or a blue arrow for a sell. And it's as simple as that. The way in which it works is that it actually uses some of the indicators, some of the trading indicators that currently exist. One of the main indicators that exists is EMAs, which is exponential moving averages. all that means is that the algorithm takes into account the average of certain amount of candles so that it can then identify where the price action is, where it's moving. The indicators that we use or the EMAs that we use, there's 5 of them, is the 800 EMA, which means that we're using an average of 800 candles. We use a 200 EMA, 50 EMA, the 13 EMA, and the 5 EMA. All these indicators give us a clear picture of where price is going and an indication of where price is likely to continue to. So it's like another signal, it's another eyes on the market, another way of looking at it so that we can decide where we want to get into a trade and where we want to get out of a trade. And based on this indicator, we can more accurately decide where this can happen. There is another indicator which is used a lot within the Delorean, which is TDI. I'm not going to touch on that today because it's a little bit more complex and it's not really necessary to any great degree in terms of what I'm going to be showing you today. Now, the package is called Delorean. However, Delorean is only one of the signature trades that Tyrone Foster teaches. It is the proprietary one. It is the main one as such, but it's not by any means the only one. So you have the Delorean, there's the vector trade, there's the BTS, which stands for between the sheets, and there's the 50-50. So you can really take advantage of the Delorean package and learn different ways in which you can enter the market, take trades based on your skill level. The Delorean really is the entry level one. So that's for the novice who just really wants to identify a signal, take a trade and profit. The rest, they take a little bit more understanding, a little bit more education and development, but that's great because that's what we're here for. So what I'm going to really spend time on is the vector, right, and how to understand how the vector works, vector trading system. So a vector essentially is just a false move within any particular market, whether it be the Asian market, London market, US market, whichever. It's where price has been pretty much stagnant for a period of time. There's not been a lot of volatility. And then the price just moves very sharp, very rapidly within one direction or the other, whether it's up or whether it's down, whether it's a bullish move or whether or not it's a bearish move. It's the market's way of capturing the stop losses that people may have placed during a particular market as people have been trying to decide, you know, where they want to place their entries, where they want to place buys or where they want to place sells. What happens is that the big boys will then move the market, take out those stop losses, then make their real move. So the vector is like false move really, just to capture some of these stop losses that exist. For the purpose of the way in which it applies to Delorean and how Tyrone teaches it, we look at the Asian market as the point in which where we want to identify the vector. Now, don't worry if you don't pick this up. I'm going to show you some screenshots and I'm going to show you some charts later on so that you can understand exactly what I'm talking about. But the vector normally happens, or it does happen, after the Asian market closes. Now, the Asian market runs from exactly from 10 p.m. our time to 6 a.m. the following day. And this essentially is where there's not a lot of players, there's not a lot of big boys in the market. So the price doesn't generally move that much. It only moves within a certain amount of candles, generally speaking, certain amount of pips, generally speaking. So what happens here? We generally see that price keeps within a tight, narrow band, normally between 0 to 50 pips, essentially. When we're looking at our charts, we're going to be sticking to the 15-minute chart. So the range that we're looking at from 10 to 6 equates to 32 candles. So the range that we're looking at is 32 candles between 10 p.m. and 6 p.m. And we're looking to identify moves no greater than 50 pips, there or thereabouts. Once we see these things happening within the market, then what we're expecting to see is a breakout, which I've already mentioned, which is the vector. The breakout is also known as a stop hunt, and it's self-explanatory. What it means is that the market now is looking to take out people's stop losses, because for the past 6-7 hours, people have been trying to get an idea of where the market's going, whether it's going up, whether it's going down, placing their trades, putting in their stop losses. The market now goes on a stop hunt and wipes them out. Okay, so how do we know, or how do we identify what the vector looks like, and what this particular range looks like, and what a stop hunt looks like? Well, on this slide, I've got a very, very simple diagram of what this generally looks like, and I'm going to show it to you on the charts in a minute. Some of you may remember this, that I've spoken on buying or using a W formation or an M formation in which to identify where to get into a sale. So if you look on the screen, you can see it says buy and sell. On the left-hand side, you've got a W, and on the right-hand side, you've got an M. Now,
Sorry, Maurice, can you make the screen a little bit bigger?
oh, I don't know if I can. I can try. Hold on a sec.
Not if it's going to ruin everything, of course. It's a bit hard to see.
Oh, is it? Oh, crap. Oh,
Well, it is for me anyway. I'm guessing I can see the same as everyone else.
right. Is it a little bit too small for you guys?
No,
Maurice,
it's fine for me.
You're actually in presenter view rather than slideshow view.
Oh, right. Okay. So what I'll do, I'll stop that and I'll show you so that you can see it a bit larger. All right.
Yeah,
That's good.
that's
Yep.
perfect.
Is that better for you guys?
Yeah.
Yeah.
Yep.
Okay. Right.
Thank you, mate.
No problem. So, okay. So you can see this sort of like little diagram. All right. You've got your W and you've got your M. Now, if you look to the left, yeah, you've got the W. Now, the first leg of that W, that is the stop hunt. And I'll show you that on a graph, on a chart to you later. This is where the market is moving sharply downwards, and it's taking out all the stop losses that have been placed prior to this particular time. Then price hits a low, and then it reverses, retraces a bit. Then it continues on the downward move. But if you notice, it does not go below the previous low. Yeah, so that says that's a pretty strong floor. That's a pretty strong level of support, because price has not broken through it. If we notice on the last leg of the W, is that price then shoots up and it continues in an upward direction, and it breaks, yeah, the previous high and continues. When price breaks the previous high, that is a very good indication that price is going to continue in an upward direction and a good place again in a trade. And the reverse is true. The M formation is just the W, inverted. It's the same thing. Yep. Price shoots up, hits a high, then retraces, to a point, not a full retracement. It retraces about halfway down, continues in an upward direction, does not break the previous high, retraces, continues on a downward momentum, and breaks the previous low. That is a good indication that price is going to continue on a low, and we take a trade. Okay. Right. One moment. Okay. All right. Don't know why my PowerPoint isn't working, but bear with me a second. So what I want to do now, actually, just show you a good example on my charts. Right, I just need to get out of this if I can. Right. So on the chart, let's see what it looks like. Let me give you a good example. here's a good example, all right? This is the US dollar Japanese yen. This was last week, Friday. Yeah, so I'll draw it out a little bit for you. So the dotted line here, that's the end of the Asian market. So from there, we'd be looking at 32 candles or to 6 a.m., sorry. Yep. And that is the range that we'd look at. And as you can see, price doesn't move that much in this area, only moves a little bit. Okay. In this example, we're looking at a move. Yeah, it didn't move more than what, 22 odd pips. Yep. 22.2 pips, there or thereabouts. All right. So not a lot of movement. After that, then we see that there is a strong move directly after this period here. This is where the market is taking out all the stop losses that are in this area. So anyone who was trading and they had stop losses in and around this area, they've been taken out, right? They've lost out on their trade, and the big boys have then capitalized on that. That's the false move. Now, this is what happens. A lot of amateur traders, a lot of beginners would then see this and think, price is going to be dropping for the rest of the day. Let me try and get in on the action. But that's the false move. What we see after this, yeah, is another move. And essentially, this is doing exactly the same thing pretty much. It is taking out everyone who thought price might be going up. So not only have traders lost out when price was bearish, they've also lost out as price is now bullish. So this is the things that we look for when we're looking for the signature trade, which is called a vector. We're looking for this range here, which is the A range. We're looking for the stop hunt here. Then we're looking for this sharp magnitude push up here. This is what's called the vector. And that's what we're looking for when we're looking to trade. Okay, see if I can get back into my PowerPoint, see if it'll play ball. No, it's not. All right, must have started again. Right. Okay. Right. So that's the pictorial view of what I've just been speaking about and what I've just showed you on the charts. Okay. Here's one that I've drawn up completely, and I'm going to just run through all the elements of it here. So first things first, we see the A range marked up pretty clearly there, right? 32 candles, pretty much. Not a lot of movement within the candles. Then we see the sharp push upwards, right, which I've highlighted as the vector. And then we see price hits a high, then it starts to go into a bullish, into a bearish kind of move. Now I've identified an M right here. Yeah, can you see that? All right, where price moves up, comes down, moves up again, but it doesn't take out the previous high. And what I want to show you on the live chart is exactly what it looks like on Friday's chart on the US dollar Japanese yen. I'm going to take off the candlesticks because that can be a little bit confusing. And we're just going to look at the line graph. Now, if you look at the yellow line, yeah, let me see if I can just follow it with my arrow. If you look at the yellow line, you can quite clearly see an M formation. Can you see that there? Yeah. If you look at the yellow EMA, you can see an M. You've got an upward move, down, price comes up, but then it comes down again. All right. That is the M formation. That's what we're looking for when we're looking for our entry point for a bearish move. Okay, so I've got this here as well, right? We've got an M formation here. I've also got on here, you'll see I've got a exit zone and an entry zone, and I'll go into detail with those slightly later on in the presentation. But what we can see here is that after price hit its high, it then starts to move in a bearish move. In other words, the price started to drop. And this is what we want to capitalize on as traders. That is the main move, because what we've identified here is where the market is aimed to take out the novice traders. Price has set pretty much the high for that particular day. We can safely assume that price is not going to revisit that high by taking into account where the EMAs are. And we can see them colored here. We've got the yellow, red, blue, white, and aqua. And we can see price start to push off nicely in a bearish move. Now, so that's what this looks like. Here's another example. We can see again where I've identified an A range. I've identified the vector move here. We've got a W formation at the bottom. I've got my entry zone and I've got an exit zone. And we can see to the very right of the chart, price then moved in a positive direction or a bullish direction. And that's what we would capitalize on as traders. And here's just, more examples of the same. Okay. That's all well and good. But what we really want to know is, when do we enter a trade? So what we're going to be looking for, what you aim to look for, are two specific things. You're looking for the shift. Yeah. Now a shift is when the 13 EMA, right, which is the red line, crosses the yellow line. That is the other indication that there's going to be a change in direction of that particular price pair, that particular currency. Once that shift happens, then we're going to be looking for the confirmation candle that happens afterwards, after that move. That's known as the shift candle, right? And the shift candle is the one which is to the right of where the two lines cross, where the red and the yellow lines cross. That candle that's formed directly after that is called the shift candle. Once we've identified the shift candle, then we can enter that trade when that candle closes. And again, I'm going to show you an example on the charts in a little while. Okay. In fact, I might show you that now. Let's look. Let's see. Right. I might have one here. Let's see if this one's one. Okay, all right. This might be a little bit small, but if you look on this particular screenshot, you can see that there's an M formation here. And you can see that the yellow EMA on the vector is on top of the red EMA. But there's a point where they cross, and then the red EMA is above the yellow EMA. It's at that point there where you want to enter the trade, because that is a very good signal that price is going to continue, in this example, into a bearish direction when the red EMA crosses and is now on top of the yellow EMA. That is when you want to take your trade. Okay. All right, those are my examples. So it's all well and good getting into a trade, because now you're in the trade, you're in profit and you're making money. But that's almost like being on a roller coaster and you have no idea when it's going to stop. So what we want to do is identify, well, hold on a minute. If we're using technical indicators to get into a trade, we want to use technical indicators to get out of a trade. We want to be able to identify when to get ourselves out of the trade and basically capitalize on that particular move. Now, within the Delorean suite, within the Delorean education, they teach 5 signature exits. There's the red collapse, the RC, they've got the VBC, they've got a trend line exit, which is known as a TDI, a liquid collapse, and the 3 candle rule. We're going to ignore all of these. I'm only going to talk on one of the main one, which is the red collapse. The others are a little bit more complicated, a little bit more difficult, and really only is used when we're talking about Delorean trades. So what is that? A red collapse or a KC, this is where price has moved in your direction. So you've taken the buy, you've taken the sell, but price, for whatever reason, has started to slow and it's moving against you. And now we see that the candles are getting to the red EMA, the 13 EMA. So when price revisits the 13 EMA and it closes either above it or below it, depending on whether you're in a buy or a sell, that is your opportunity to get out of the trade, because the EMAs are essentially telling you that the market is now changing direction. And it's an early indicator for you to cut your losses, bag your pips and run, all right? The beautiful thing about this particular exit strategy is that it often occurs before your stop loss. So if you see that the price is going to has closed either above or below the red EMA, exit the trade. Don't worry about your stop loss, particularly if you're new. It's a good way to maximize the amount of pips that you've got before your stop loss is hit. This is why this particular way of trading is popular with a lot of people, because it actually minimizes your losses. We always set a stop loss whenever we take a trade, but if we use this particular exit strategy, we know to get out of a trade even before the stop loss is hit. And that's called the RC. Now, that's one of the signature trades. And I've just kind of like given you an overview of what the components are of this particular way of trading. It is very, very straightforward. It is very, very simple. Essentially, we are looking at trades that happen after the Asian market. We're looking for trades after we've seen the stop hunt happen. In other words, where we see a false move outside of that particular range, the Asian market. We're looking for a sharp magnitude push either up in a bullish market or down in a bearish market. We want to identify that. And then lastly, we want to identify an M in a bullish market or a W in a bearish market. We then want to identify the shift. That's when the red and the yellow EMAs cross. You identify the shift candle. That's the candle that follows directly after the cross of the two EMAs. And then boom, you're in the trade. The best way to get out of the trade is either for the trade to hit your stop loss if it's going against you, or if price closes above the red EMA if you're in a bullish market, or below the EMA if you're in a bearish market. I know that's a lot of information, but that's essentially how this simple trading plan works. To understand it in its entirety and in complete detail, Tyrone Foster's the guy. He can show you exactly how this works, and it's his baby essentially. And if that makes any sense, you've got any questions, feel free to ask me. I'm happy to go over some of the slides, or happy to show you in real time on one of the charts how this works. But essentially that's it. That's how the vector works, and that's how we profit on trades in a 15-minute time frame. Any questions? I'm happy to take them.
Thanks, Maurice. But so do you need to be at the computer the whole time? You can't set your take profit and then disappear.
You can only do that if you're going to be trading on a higher time frame. The examples that I was giving you was for a 15-minute trade. So essentially, you're going to be at your computer.
Can you do it on your phone?
I've not done it on my phone. I've never, right? Maybe because my eyesight, I don't know what, but I do it from my laptop. The good thing about it, yeah, is that you can set pendings on this, because if you're operating on a higher time frame, say like an hour or 4 hour, you know you've got time to play with. So you've identified the vector. You've identified the sharp magnitude up. You've identified that price has hit either the high for the day or the low for the day. Yeah. And it's forming that M or a W. So you've got time to play. So you know where the high point is of the day or the low point of the day. So you can then say, okay, I'm going to set a pending order pretty much where the high is, then come back to it later on and enter your trade. So it really depends on whether you're operating on the 15-minute or you're going to be operating on a higher time frame. Does that kind of answer that a bit, Aaron?
Yes.
I personally use it as almost like a scalping strategy. I in fact, predominantly only ever used it on a 15-minute time frame. So I'll be trading for an hour, a couple of hours, and I'm just taking trade after trade after trade on a 15-minute time frame.
Maurice, have you done any stats into how any stats into how successful they are in terms of the alerts that you're getting from Delorean? And are you actually relying on the Delorean alerts, or are you able now to implement this as a strategy which you can just look at the charts and do for yourself?
Very good question. Yeah, I've kept a lot of my trades. I've got I've taken screenshots of about 100 or so. And two things to bear in mind with this, is that the vector strategy, or the vector that we see appear after the Asian market, doesn't happen on every time frame, every single day. Yeah. So if you are a trader who has, say, 5 or 6 main currency pairs that you're looking at, it may happen on 3 or 4 on any given day. So you can use it in that particular scenario. Sorry, what was the second part to your question?
The second part was, are you waiting for these alerts to come from Delorean? Or are you able now just to use this strategy now that you know what you're looking for? You're looking for the A range, you're looking for the vector, you're looking for the moving average crossover. Can you just do that? I mean, can you just do that yourself and just look at the chart and say, oh, there's one, there's one, there's one, without having to rely on the tool?
Yeah, this is the beautiful thing about this. I'm going to share my screen again, and I'm going to show you something. Essentially, you do not need to use the Delorean signaling software to play a vector. The reason for this is that a vector always happens before you receive a Delorean. So in this example, I'll highlight here. Here is where we see the cross of the red and yellow. Yeah. All right. We see a cross of the red and yellow right there. Yep.
Yep.
Okay. So that's where the cross happens. So you would then look to enter your trade after that cross, and that's known. So that's the shift, which I've identified. Yeah, where the lines cross, you would look to enter your trade here. All right, right there. All right, that is the candle that you want to see close, and then you just continue to ride price down. Yeah, until two things either happens. Yeah, one which I won't go into too much detail, you would utilize the ADR. That's essentially when you understand how far a particular pair moves in a particular day. So if you know that, say for example, the US dollar Japanese yen moves, say 70 pips in a day, you'd be looking to capitalize on about 45 pips, 50 pips max on that day, and then get out because price is due for a reversal. The other thing is that you want to bear in mind is that if price then starts to move in this direction and closes above the red EMA, yeah. But if the candle closes above the red EMA, which is here, then that's a good indication that price is going to turn on you and you want to get out of the trade. That is the KC exit. Yeah. So this particular way of trading, a vector, taking vectors, is down to you as an individual to identify the A range, identify the shift, the vector, the M or W, where the EMAs cross, where the shift candle is, get in the trade. After you've taken this trade, you will find there'll be other opportunities to get in the trade, and those opportunities are called a Delorean. And I won't go into too much detail about a Delorean, how you identify Delorean trade. Essentially, it's when you have an indicator. In fact, I'm going to go into that now. I think I've got Delorean open now. Yeah. Okay. Let's see if I can find.
Can you get the entries from smaller time frames, even though you got to enter on the 15?
No, it's 15-minute and above.
Okay.
All right. So here's a Delorean. You can see the blue candle down here. Yeah. Yeah. Okay. This is a Delorean signal, and it's saying essentially to enter the trade here. And as you can see, price did go in a bullish move, so you would have profited on this particular signal. How you confirm, say, yeah, this is a trade that I want to take, is you're looking for the red EMA. It's very, very small. Let me see if I can enlarge this. Okay, so what you're looking for is, in this scenario, you're looking for this blue candle to be bigger than the red candle, which it is. Yeah, you're looking for the red EMA to cut through both the red and the blue candle. Yeah, if price has done that, then this is a good indication that price is going to continue north and you can take the trade. What you're also looking for is a nice gap between the most recent EMA and the next EMA. In this case, it's the gray. If there's a big gap there, then that's your area of profit, because price will generally return, it will generally reverse on the next EMA. So in this example, we can see that there's a lot of room for profit here from where the signal was given, and then it's 254 pips essentially. So there's a lot of room for profit. This is the gold trade. So that would have been a good trade to take. Yeah. But the beautiful thing about vectors is that you would have much, much earlier than where the Delorean was given. You would have gotten in round about here, because this is where a vector is called, where I've got my cursor here. You can see that. It's where the yellow crosses the red, and the yellow EMA is above the red EMA. So you could have taken an entry here, which is called the vector, and you can then take the entry where the blue arrow is. That is your Delorean. So you're in this trade twice and you're in the money.
Look at that.
If you had taken it at that point where you say it crossed over,
Yep.
that candle with the wick would have taken you out if you hadn't have had a big enough stop loss.
Let me go back to that.
I would have waited for the signal, because there's preceding the signal, there's a big wick that would have taken people out.
Yeah, it might well have done. I didn't even analyze that one. I didn't even, let's have a look. Let me go back to it. Right. So you would have entered, right, this is the cross. Yeah.
Show your screen again.
Share the screen.
Oh, so you're not seeing it. All right, 1 second. Okay, right. So what we've got here, we've got the cross of the EMA. Yeah. Then you've got this candle here, the one that precedes it.
Yeah.
Right. So that's your cross candle. Yeah. So you would enter at the close of this candle, this blue one here. Right. So that's your bullish candle. So you would enter at the close of here. And essentially what you would do, if remember the confirmations here, if you get a candle form below the EMA, that's your point to either exit the trade or continue to your stop loss.
Oh, okay.
Yeah.
I got you.
Okay.
Maurice, just on that screen still, please, on the Delorean.
Yep.
I think it's quite hard, unless you've got a bit more of a trained eye, to spot where the actual signal was. Can you point it out for us, the arrow?
Yes.
Yeah, I know. It's blue. It's crazy, isn't
Yeah,
it?
because I think there's probably people on this call who haven't seen this site before, you know?
Yeah. Yeah. Not a problem. It's right here. Hold on a minute. Right. If you can see where I'm going to delete. I'm going to use my cursor. Right where my cursor is, there's a blue arrow. Yeah.
If you blow it up a bit more, maybe you can see it then.
Yeah, sure. It's really, yeah.
Tricky
Because
to
price
see,
has
innit?
moved on. Yep. It's
I think
there.
you can change the color of it. Oh, you got it there, yeah.
Yeah, yeah. You should have. Yeah, well, because I've moved it. It doesn't like me messing with it, but there it is. Yeah. So it's at that point, that candle, when that candle closes, that's when you'd enter the trade. That's the signature Delorean trade. Right,
Okay.
right there.
Maurice, where would the stop loss be on that trade?
Generally, stop losses, they say that it should be spread times 2. So anything, depending on which broker you're using, your stop loss be spread times 2. But what I would generally do is take my stop loss below the previous 2 candles. So the low point of that candle, so in around about this area, is where I put my stop loss. I'll be looking to put my stop loss. So below here, yeah, around about here. Yeah. In this example, gold, because I don't actually trade gold and he's got a long wicks,
Yeah.
I may not even have taken this particular trade because my stop loss would say it needs to be about there. So this is where you've got to analyze your trade. You've got to look at, well, is there enough in this trade for me to want to take this risk? Because I know that price is essentially going to shoot up here. So as I said, roughly from point of entry, so that's what, 290, call it 200, yeah, 280 odd pips, yeah, profit. My stop loss is approximately, from the signal, yeah, 116 pips. So
Oh,
yeah,
damn.
if it's this is gold, yeah, I don't trade it, but you would
No
then
way.
decide whether or not that's a trade you want to take. Is that stop loss going to be too big for you?
No, no way. No way.
Yeah.
That's
And that's it.
humongous.
So you leave that one alone.
Yeah, leave it. Yeah. Yeah, because Abel always says he calls out DeLoreans as well. Abel does, and he always says, no, that's not a good trade. I wouldn't take this one. People, I wouldn't take this one. So you don't have to take every single signal that's called. It's only the ones that you
No,
deem
definitely
yourself.
not.
Yeah.
Yeah. Based on what your risk parameters are, you take the trade or you don't take the trade. But the confirmations are there, and the confirmations for you to justify to yourself whether or not it's a good trade for you or not a good trade. Definitely you don't take all the signals. Definitely don't take all the signals. Have your set confirmations. If they match up and it's one which is within your risk parameters, then you can take the trade.
So Maurice, if you turn around now after this call and go, right, I like the sound of DeLorean, Vector and bits like that. I want to go on the IM Academy. I want to go to that educator. I presume they've got favourite sessions, which is where you've got to start and watch through them to learn it.
Yeah.
How many videos are there? How many hours would it take you to go from novice to being like, right, I know where I'm going with Vector DeLorean?
Okay. DeLorean, you can knock that out in a weekend, yeah, or an evening, or a day, should I say. Vectors, again, you can learn that in a day. To learn all the signature trades, yeah, all the exits, yeah, and all the indicators, that's going to take you some time, yeah. But it's progression. The good thing about it is that you can start off relatively easy with limited knowledge and start profiting from the DeLorean trades, because you're only looking for about 4 confirmations. Then you jump into a trade. So then you can jump into favorites, go through favorites, learn the different elements that sit underneath the whole DeLorean suite, and just building your knowledge there. Take more trades, different types of trades, and be more profitable. I would say to go through the whole program, you are looking at about a month, depending on how much time you've got. Yeah, you're looking about a month to learn absolutely everything that's in the favorites. About a month.
Cool.
But 1 day for Delorean, you can get through the whole kind of just the Delorean signals. You can get through that in a day, right?
Easy. Yeah. Easy. You should be able to get in. Again, it depends on how much time you've got in terms of hours. Understanding Delorean, to take a Delorean trade, really, you know, it takes a couple of hours. That's about it. And then you want to practice it on your dummy, and then you want to become familiar with it, and you can take trade. But the Delorean is like it's their flagship. For me, the better type of trade, the one that sits within their academy, like taking a vector, like taking something trades. Them for me, there are ones which allow me to just, stamp my own personality on them, decide whether I want to take a trade, not having to wait for a signal on an algorithm to shoot one out for me. It just gives me more control.
Love it.
Maurice, we'll go into more detail on this question next week, but so I've got a really busy schedule. As an example, I'm struggling to find time to do my trading. How could we incorporate Vector or Delorean into that to also make us profitable, to be making 10% a month or something like that?
Yeah, the good thing about DeLoreans and vectors is that they operate on all different time frames, from 15 minutes right up to daily. So you could do your analysis on a 4-hour chart, knowing that each candle is essentially 4 hours, or you could be doing it on a daily chart, knowing that each candle is a daily chart. So you've got loads of time to start your analysis, understand where the market is going, set some pendings in there, refine your trade, your entry points, your exit points, your stop losses, and it just gives you that flexibility. Personally, I like to use it on the 15 because I like to be in and out relatively quickly, but I have used it on the past where I've looked at the 4-hour time frame, and that's essentially, an intraday trade.
Okay.
But the analysis works on all time frames.
Cool. Have you used it on silver Japanese yen?
I'm glad you mentioned that.
Oh, that is so bad. Oh, Aaron, you are cold. You've got to share the inside joke for everyone, Aaron.
Sorry, I've just been sitting there watching Angel. I had to actually look in and be like, has he just like done a screenshot of himself and frozen it there? He's just been sitting there like
You guys are bad, man.
So go on, share the joke.
Android is the king of trading silver Japanese yen, and he's probably the only person in the world that actually trades it. So there's not that much competition.
I feel so alone, man. Nobody's with me.
Listen, pinnacle, right? There's only a small area at the pinnacle of every mountain, and you're sitting on the pinnacle of this particular mountain. It's always going to feel lonely, mate.
It's tough at the top, Android.
Tough at the top, but enjoy the view.
Thanks, man.
Sorry, man.
Yeah.
So, okay, does anyone have any other questions on Delorean or Vector or anything like that?
I have a question.
Go on, go on.
What time did you say was the best time to trade this method, this tool?
Oh, excellent! Right, if you're looking to trade the vector system, it is going to be anytime after the Asian market closes. So
Really good.
I'm going to share my screen again. Okay.
That move usually happens around 7:15, Maurice, I think.
Yeah. Here we go. All right. So yeah, here's what I did earlier. So this particular trade, didn't actually trigger till around, well, it was after midday, the entry. Yeah. So, but what I was looking at prior to that, is after the Asian market had closed and the vector started to form. So this sharp move upwards, it really only happened from, what does that say? 6 o'clock onwards, right? So I wouldn't be looking at the markets too strongly here. I'll be checking in on them every, whatever, half hour or so, hour. But the actual entry point for this particular trade didn't happen till after midday on this particular example. Yeah. Let's see if I've got more here. I've got loads. Yeah. On this one, the entry point again, that was later on in the afternoon. But the thing is, I'm setting up my trade. I'm keep looking at the pair as the day goes on. So I'm looking for the elements of a vector move. So I'm looking for my A range, looking for my vector to form. It might happen only a couple of hours after, or an hour after the close of the Asian market. Yeah, again, this one's just after midday where I took a trade. So yeah, essentially it's after the Asian market closes, you want to start to get yourself prepared to start looking for trades. Does that answer your question, Dominique?
Yes, thank you.
Wonderful. Anything?
Any more questions from anyone? So I think Maurice, you went through quite a lot there, and it's quite interesting. It's whet my appetite, definitely. If we could use it as another tool. So what we'll do is we'll get some feedback from everyone, I think, and then potentially look at, building a bit of a side group, talking a bit more about Delorean or something like that. Finding some, do you know what I mean? Finding a little place for it in our trading, because
I'm up for that. I mean, this was just to give you an overview. Yeah, it was there because there's a lot of elements to it, and if it's something that interests you and you do purchase the Delorean suite, you'll see that he will spend maybe 4 hours, right, in 1 hour segments going through how to trade a vector. I tried to go from the very beginning to right there through to exit strategies. He spends an hour on exit strategies, for example. But I just wanted to give you a flavor of what to expect, what to look for, and get an understanding, really, is it something that you might want to employ or not?
Does it work best on scalping, Maurice, or does it work best on scalp? I know you said it can be used over any time frame, but it works best on the short time frames. Is that right?
I had most of my success on it, so I like it for that. Even though it works across all time frames, for me, yeah, scalping in and out.
What's everyone else's thoughts on it? Rachel, Steve, Tom, Harvey. You don't need to say anything now, but I mean, you're more than welcome to, or just send me a little message, just letting me know your thoughts on it, really. And if you want to know more about this, because the IM Academy has got so many products like this available, and we haven't even scratched the surface, and it's all there just to, I mean, you see how easy it is just to make money from it, and we've seen the power of compounding interest and what it can do. So if we can do something and not work very hard and make 10% a month on it, I'm in, I'm in. And just asked, what's your success rate? 70% success rate on your trades.
That's amazing.
Nice. And what sort of account growth are you getting from that, Maurice?
My trades, my kind of like default is 5%.
What, per trade?
5% per session. So generally speaking, if I'm trading vectors on a particular day, I'm looking to grow my account, say by 5%. So I would normally hit that. If I get 3 really good trades, then I'll make my 5%. And when you think about it, you're talking about 15-minute trades. So I can, I've done it on 1 trade before, hit my 5%. Others, I've had to wait. I've had to take, 5 or so trades, because some of them I've had to abort, or some of them, the market moved against me and I got out a little bit early, whatever.
And that's when the mindset stuff's going to come in then, because you know, you need to be patient, you need to wait, not overtrade, etc., etc., which is all, you know, it's all part of the journey.
Yeah, and also, you know, I think I'm kind of selective sometimes as well. I don't take every trade. It's got to look really good, and it's got to meet my confirmations. And if that does, then, you know, I'll take it. There's other confirmations that I use, like, for example, the time, what time's the market open, closes, is there a crossover period, things like that. But yeah, for me, I love it. You know, vectors is really, really good. And the more advanced you get, once you start to understand vectors, then you can actually use a similar methodology in other styles of trading as well.
Excellent.
I'm sure some of the guys who've been here a little bit longer would recognize the chart pattern when I was talking about M's and W's. You would have realized, oh, well, I've seen that kind of move. For example, institutional trading or anything else. Yeah. So you would have seen similarities and crossovers. So this is why it's nice to get a flavor of all the different ways in which you could approach the markets, because it just gives you more ammunition in your arsenal.
Yeah.
Exactly.
I think the difficult thing is now is not to get diluted with too many different strategies and concepts, because, you know, it's great. Yeah, it's great for I think Chelsea have just won, Leon. So I don't know if you're applauding that or my question.
I was actually applauding your statement about, you know,
There was like that. I thought he was like, "Go on, Chelsea."
No,
right, anyway,
no, that was you're dead right on that, mate. You're dead right on that.
I think it's great for some. I mean, you can never master a strategy, right? As soon as you think you have mastered the strategy is when you actually don't know anything on it. But I think where quite a few of us on the bounce back smart money concepts might be at a certain level and then can start adding other strings to that. I think it's very important that people at the beginning of their journey don't start going, right, I'm going to try this for a little bit and then try this for a little bit and then this for a little bit, because it's just not going to work. So I don't know what I'm trying to say, but probably not get yourself too flustered with trying to learn too many things. Delorean seems to be a lot easier to learn than smart money bounce back concepts. So what do you think? Is it worth newer traders going for the vector Delorean side first of all, and then looking to bring in other bits, or just giving them a choice, or
let me. Do you mind if I jump in here with
yeah.
my thoughts, Aaron? I think your point of saying, you know, we've got to be careful, because, especially as we're talking to some new traders. First off, it's great to see some new faces in this chat. Stevie, great to see you, man. So happy you could make this chat. Rachel, great to see you. I think it's your first time in this Sunday evening call. I think everybody else is probably Tom, great to see you on this Sunday evening call as well. I think mostly everybody else has been on this Sunday evening call. Now, we do this every single week. We've done it for months consistently for traders who have been through the game plan. And I think this is the important point. This game plan is designed to take you down the route of institutional trading. And once you've completed that game plan, it kind of says, okay, well, when we have these calls on a Sunday evening, everybody's going to understand the language, the jargon, the points that we're making, exactly what we're looking for. But we decided for this week to open it up just because somebody wanted to know about Delorean. And Delorean is something that everybody can use, something that everybody can get to grips with. So we opened it up for the rest of the team. I thought maybe 1 or 2 more people would join. Never mind. But I do think it is a great way. It really is a great way to show results. There's 2 fantastic ways to show quick results with the I Am Mastery Academy. And going through Delorean is one of the 2 ways, I think, where you can see quick results. Doesn't have to be big gains, but quick results. So I think maybe Aaron, whoever else we're speaking to, Maurice, Ray, Andrew, some of the guys we've been speaking to for a while, we should possibly look at Delorean as a way to just show new joiners some quick results. Not that quick money, but quick results, right? So say, oh, this concept actually works. Now let me keep going, let me keep going, let me keep going. Just so you know, the other route to kind of quick results, please understand there's a big difference between quick results and quick money. The other route to quick results is HFX, which is the high frequency trading. It's going mad right now. People are going absolutely crazy for HFX at the moment because it is so simple once you learn it. So I think there's definitely some kind of mileage in looking at Delorean and HFX as quick results strategies for new joiners, but we'll have a little chat about that and see how we can build that into the game plan.
Yeah, Leon, I 100% endorse what you're saying, and you know the way to look at it is like this: is that if you were building a house, yeah, it's kind of pointless you learning how to tile a roof if you don't know how to build a foundation. Yeah, you've got to start from the ground roots up and have an understanding of how to build from the bottom up, from foundations to laying the first floor, getting the electrics in, stuff like that. The beautiful thing about the academy, as Leon quite rightly says, is that you may want to see results early on. You can get that, but that doesn't mean that you understand the technicals or the jargon of trading. Once you understand the technical elements, the analysis, etc., you then start to become more independent from just a signal taker, from just someone who cuts and pastes. It is a great way for people to really just get a sense of an understanding of, yes, this works. And some people just want to be cut and paste traders, but if you want longevity, if you want to be independent, go through the whole program, understand the terminology, understand how the market moves, what a candlestick is, what, you know, average daily range is, all types of things. Understand all of these sort of things, and then you'll become an independent trader.
Really good.
That's my 2 pennies worth.
Really good. We have some other questions, Aaron, but I don't think we're going to get through those today. I think we should probably hold those off till next week.
Some other questions or some other things to go through?
Well,
if anyone's got sort of DeLorean questions, I think we should strike while the iron's hot. But yeah, I think if no one else has got any questions, then yeah, we'll definitely look at wrapping up the call.
Yeah, we had a couple questions on. I think you asked it to Aaron, to Maurice actually, about how he fits it into his day. We had one about back testing that came through into the group as well. But I don't think we should divert from what's been a really good session, and we'll do that stuff next week, right? Right? You agree?
Yeah, we'll spend time on those questions, the time that they deserve, and we'll revert back next Sunday, I think, into our kill shot agenda, our smart money concepts, following that new structure we spoke about. But then I think, and we'll have a chat about it, is adding a DeLorean call during the week. And I mean, I like it. There's a lot of legs in it, and as the win-win group is expanding, yeah, I mean, why wouldn't we? Like, why wouldn't we? And look at doing a, I don't know, Tuesday night DeLorean call, a Sunday morning DeLorean call, whatever. Yeah, something along them lines, because yeah, I definitely think there's value there.
We'll need a DeLorean expert willing to take that weekly call, though, Aaron.
We need Maurice.
Hey, hold on a sec.
Exactly my point. Exactly my point. All right.
I'm a busy man. You can't book me up just like that.
Thank you for volunteering, Maurice, King Maurice.
Yeah,
it's very kind of you.
As well. I'm fully
this is like one of them, you know, in the films when they go, come and volunteers step forward, and everyone else steps back.
Step back, yeah.
And you were left there, Maurice. So it's all you.
Anyway,
Maurice, end the call for us.
Yeah. Brilliant, guys. All right, we're done. We're done for another week. I'm going to stop the recording. Thank you so much. Please keep your eyes on the chat for upcoming events this week. There were loads that got literally, what a mad weekend in the win-win chat. I'm glad we was able to get this call in the simplicity chat. Keep your eyes peeled. Aaron, thanks again for organising this and getting this call up.
Thank you, guys. Great seeing you.
Sevens in the chat for Maurice. Thanks. Sevens in the chat for Maurice.
Put some sevens in the chat.
Put some sevens in the chat. Blow it up. Blow it up.
Take care, everyone.
Yeah, thanks, guys. Bye, yeah, it's a pleasure.
Bye.
See you all.
Stevie Lou.